Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from CanAlaska Uranium President and CEO, Corey Bellick. Now, during today's webinar, he will provide an overview and outlook, and then we will take some questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this CanAlaska webinar, forward-looking statements may be made. I direct listeners to their forward-looking statements outlined on page 2 of the CanAlaska corporate presentation. That can be found on the company's website, canalaska.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on CanAlaska. With that said, Corey, why don't you take it away?
Well, thank you, David, and to Red Cloud. It's a real pleasure to be here today in mid-July, telling the CanAlaska story. And it's a great story that's unfolding in front of us as we came through an incredible winter, and now we're moved into the summer with an incredible drill program in front of us for the next few months. And I'm very pleased to be here to talk about that today. So we will be spending a lot of time on our Pike Zone discovery, talking about that, where we are drilling an ultra high-grade uranium discovery. Ultra, use of that word, is really sets it apart in terms of it looks a lot more like a McArthur River than not. And we just see the grade and thickness being something that's incredibly special, even in the Athabasca model. So we will focus on that today. And I am CEO and president for CanAlaska Uranium. And again, it's a real pleasure to be here today and tell you this story. So let's walk through the presentation and hopefully get a great feel for how we came through the first part of the year and where we're going to in the back half of the year. I will, of course, make some forward-looking statements. So how did we finish the winter drilling season in 2025? Well, we continued to expand on the high-grade uranium discovery at our Pike Zone, and we continued to intercept ultra-high-grade uranium in several locations, including the central gap area that we'll talk about in a few moments. The model stands true. It's still an unconformity-related mineralizing event, also in the upper basement, as you'd expect in a McArthur River type model. And of course, it's open in all directions with new targets developing. And importantly, we believe we're starting to see the formation of pearls, that pearls on a string concept that is so common to these deposits in the Athabasca Basin. Just to reorient the listeners, CanAlaska owns 86% of this project. Cameco has 14% of this project, and its location is right adjacent to the McArthur River mine site, just 15 kilometers due west. So we are right up against all that critical infrastructure in the eastern Athabasca owned by Cameco, Denison, and a few others. We have in our portfolio in the east about 500,000 hectares of land. We are about the fourth largest landholder in the Athabasca Basin. We are a very significant player. So we believe CanAlaska provides shareholders with an advantage. We put the right strategy with the right team, with the right assets. So we are very clear. We are focused on tier 1 uranium discovery, something more akin to a Cigar, McArthur, perhaps Next Gen Zero would be examples. We are very focused on that model, looking for these big systems, these big mineralizing events, just like our Pike Zone discovery. We're in a safe and secure jurisdiction in Saskatchewan, in the eastern Athabasca Basin, up against that infrastructure, and we deploy a hybrid model of exploration, active exploration, and project generation. We have the right team, mostly Cameco and Orano trained at the senior levels, of course, training the younger geoscientists on our team as well. So great plethora of experience coming out of the big companies, again, focused in the Athabasca region. These are truly a group of global uranium discovery leaders with a track record of discoveries. And you put them into right assets, into that large portfolio with partnerships at West McArthur, for instance, Cameco, or perhaps our Moon Lake South JV with Denison, and you finance into a very well-structured vehicle that is CanAlaska. This is an incredible advantage, we believe, amongst many of our peers. So let's look at this vehicle. In terms of corporate structure, and this is as of July 7th, it's about a week ago, we have 188 million shares outstanding at a price of 80 cents. That puts us in and around 150 million market cap. Importantly, we have $19.6 million remaining in the bank. We have an incredible 2-year chart that you're looking at right now. It's basically on an upward trend that entire time. We're very proud of this chart. In fact, last year, we were among the top 50 companies on the TSX Venture Exchange out of about 2,000. So we're very proud of our record in 2024, and we're looking to continue that record in 2025. In terms of our structure, well, we historically were built mostly on retail investors. Now we're moving toward more institutional holders. In fact, this chart here at 25% is as of September of last year. That has increased. It's actually closer to about 40% institutional holdings now. So institutions are really starting to take notice of this story and starting to take a position in CanAlaska for the longer term. We are currently covered by Red Cloud, but also by Cormark and Desjardins. Myself, been in the business 31 years in nuclear. I'm from Saskatoon, in the backyard of the Athabasca Basin per se. Worked mostly with Cameco for almost 25 years, and then moved over to CanAlaska for the last 6.5 and moved this portfolio forward. So a lot of experience on the global scene and working for Cameco in the Athabasca Basin as well, chief mine geologist at Eagle Point, and really seen most everything around the world in terms of uranium deposit models and opportunities through my time with Cameco. More recently, in the last 4.5 years, Nathan Bridges joined me out of Cameco. I've known him a long time, good friend of mine, and he's come along, and together we've rebuilt the team under us, mostly with Orano-trained geoscientists at the top, and together we're moving this incredible portfolio forward of CanAlaska's. At the board level, we're led by Karen Lloyd. She joined the board a number of years ago, took over the chair role about two years ago now. She's former Cameco director of marketing, so understands the market for uranium out there. Jeff Gay, a more recent addition, Athabasca Basin Development Corporation CEO, so he brings us the connections into the Indigenous groups in the north where we operate. An incredible bunch of knowledge comes through Jeff. And then Shane Shercliffe, former director of Cameco corporate development for a number of years. Shane and I worked on a global scale for Cameco, again, looking at all those assets around the world for a number of years. So incredible wealth of knowledge at the board level, a real privilege to work with this team. So let's just look at some of the macros. I won't spend a lot of time on this, but coming out of the U.S., there's incredible support from the current administration. Signing executive orders to move the construction or completion of nuclear plants, in a very significant way. I mean, there's talk of going from 100 gigawatts of electricity capacity right through to 400 gigawatts by 2050. If this comes to fruition, imagine the amount of uranium that will be needed to actually, service this fleet. Look at the bigger companies like Meta, Amazon, Google, these big tech companies. They're going to drive decades-long nuclear build-out that's just right in front of us. They can do it themselves, and they're actually talking about doing it, whether it's SMRs or building their facilities right up next to existing reactors or future reactors. The reality is they need clean energy. It can't be fossil fuels. They need a lot of energy, and they're moving more and more towards nuclear energy as that base load, clean power for everything they want to do on the technology side. You only have to look into Canada to talk about small modular reactors. No, I've talked about this before, but Darlington, this is a snapshot from the summer of 2025. Construction is underway. First power expected by 2030 out of the first SMR to be built in Canada, let alone around the world. So this is really a major stepping stone for the SMR world. The first reactors are going into Canada and going to produce clean energy for, per reactor, 300,000 homes in Ontario. Just an incredible outcome. Imagine when this happens on a global scale. It's going to be like Lego blocks, moving into jurisdictions like even Saskatoon, where I'm talking to you from, that could support even microreactors. What this all means is you need more uranium. So what has to happen in order to do that, to generate discoveries, to generate new production? Well, the price simply has to change. This is looking back at the uranium price, and I believe from my time in the industry, the last 30 years, that that step change zone for build out of tier 2 type assets, those projects that aren't Cigar, McArthur, perhaps Next Gen Zero, needs to move. The price at uranium needs to move north of $100 a pound. Now, this is just a look at the spot price. It's actually fairly small pounds moving around any given day, but it's an indication of a daily change in the uranium price. What I'm really concerned about is long-term contracting. Long-term contracting is back. We've got long-term contracts stabilized at $80 now for quite some time. Just the last number of months, the 5-year contract price has started to move up again, pushing close to $100 a pound. This is all indications that long-term contracting is coming back. And that's what's really needed in order to, one, incentivize new discoveries, but two, start to build those tier 2 and tier 3 assets around the world that just don't make money currently at $75 a pound. So their break-even prices are closer to 100, which means you have to forward sell north of that. So it simply has to change. And I believe that's coming in the near term. And that's based on all these strong fundamentals on a global scale, including the nuclear build-out scenarios. So let's look a little deeper at CanAlaska in this last 24 months. We've had a few raises in there, $15 million of raise last year as we moved through our exploration programs. We actually announced the first ultra-high-grade mineralization at Pike Zone in February of 2024. Then we rode a nice high through the summer, continued that into the fall, and we announced our best hole to date on the project, February 5th of this year. Immediately saw some down pressure. It was timed with tariffs. Global economics were in chaos. It just was a bad time to put out news. That's fine. Put our head down. We're well financed. Got on with business. Announced even better holes in April 22nd, actually, of this year. And now we started that trend upward again for the last few months as we moved into our summer drilling plans. So we look at this chart against our peers. We're very proud of it. In the last 24 months, we've moved up. Everybody else has sort of moved down or been flat towards the last, say, 6 months or so. We are, again, one of the better performers in the uranium space in the last 12 to 24 months, and we're very proud of this chart amongst our peers. If you look at the bigger companies, we're even in line with them. In fact, many are flat over that period of time or even down in the case of ISO, for instance. But, Cameco's come back lately, so they're on an upward trend. We've been reacting or acting in terms of our stock chart more like the mid tiers to producers through the last 24 months. So again, we're very proud of this chart for our shareholders. So we are an active explorer, project generator, research, acquire, deal, all driven towards discovery. Those projects where we feel we have the best chance to build value for our shareholders through discovery and spend of their capital, like West McArthur, will spend that. Others are available for joint venture, option agreements, other business scenarios whereby we bring outside investment to move this riskiness forward toward discovery. So, it is a great portfolio, lots of partnerships in there, and lots of opportunity for future partnerships and building value for our shareholders. We are very focused in the southeastern Athabasca Basin. The biggest spend that we have for this year is at West McArthur, $12.5 million. That's well over 90% of our spend for the year is in one project, and you'll see why in a few moments. We're drilling ultra-high-grade uranium at the West McArthur project. We've got some other smaller activity at Denison, our Moon Lake South JV. We've also got a lot of partner soul-funded exploration programs ongoing, like Constellation, Cree East, among others, that bring value to our portfolio and moving those projects, again, toward discovery. So we're very focused in the southeastern part of the Athabasca Basin. So this is our drill program. The first half of the year, we came through West McArthur and Cree East, and now we're back at West McArthur with 3 drills. Cree East is pending decisions by Nexus Uranium, and Constellation actually has just started their drilling program the last few days. So we got a lot of news flow coming for our shareholders through the summers. We move into Q4 in the fall. Just an incredible outline of drilling in our portfolio over the next several months. So our portfolio does span everything from shallow to mid-depth to deep targets, whether it's out in the outer parts of the Athabasca Basin or beyond its margins, looking for an Arrow or Eagle Point analog, say south of Key Lake, right through to mid-depth at Cree East, looking for something more like a Cigar Lake analog, or in the deeper sandstone like our West McArthur project, again, McArthur River type clone. So these deeper projects come with some great alteration systems along these fault zones, and that sandstone stacks like a sponge. So we can use that like a dartboard. We get to play at the entire dartboard looking for that simple, tiny red center that is these deposits. So, if you understand how that works, you look for these corridors. You look for the corridors of mineralization or alteration along these fault structures, and that's where you want to focus. And that's exactly what we've done with our Pike Zone. Here it is on the left, just 15 kilometers due west of the McArthur River mine, the world's richest uranium mine. On the right here, all the infrastructure, airstrip, housing, the shafts, all under that little yellow line along the P2 corridor. The road on the right goes down to the Key Lake Mill. This is how close we are to the infrastructure in the eastern Athabasca Basin. All of that milling and mining capacity sitting there, accessible to anything that we can find. Our partner again here is Cameco, so they have an interest in the West McArthur project. We can drive here year-round. We can work year-round at this project. We actually turn off the mine gate and we can drive in 12 months of the year. It's an incredibly accessible project, a great discovery location right up against an incredible asset like the McArthur River mine. We are on trend along the C10 corridor. Again, fault zones, falling structures, falling mineralization. It's already host to Cameco and Dennison's Fox Lake deposit, 70 million pounds, 8% average grade. That is a tier 2 type asset, but it's an indication mineralizing system that we're a part of along that C10 corridor. It's just an incredible story unfolding for CanAlaska and its shareholders. So here we are. This is how we exited 2024 and entered 2025. 2 real zones of ultra high grade mineralization forming up. One on the right, that cluster of red stars, incredible grades and thicknesses. You only see it in a McArthur River type mineralizing event. 26 meters of almost 7% uranium, 4 meters of which is 23%, just incredible grade. 10.5 meters of 17+%. You got 20 meters of 7.5%. The story here is ultra high grade uranium clustered together in these pearls, or starting to form like a pearl in a string. And then we moved out late in the summer, 50 meters to the west, took a step out, had a look, and we hit more in ultra high grade uranium. So this is how we ended 2024 and entered 2025. Incredible results forming up, pearls on a string concept starting to come true, we believed. So one of the things we wanted to do in 2025 through the winter and summer is focus 3 drills on this project. One drill forming up in the middle area, this gap area, that middle circle. So between the 2 ultra high grade zones of mineralization that we'd encountered last summer, there's about a 50-meter space there. We didn't have a lot of information, but we had to fill that in. And then moving to the right with one drill, or to the east where we have very little information. And if you move off this screen, you got 600 meters to the next hole. And to the left or to the west, 1,000 meters, we don't have a single drill hole in this unconformity target, yet we're still drilling ultra high grade uranium at the western margins of Pike Zone at this point. So this is how we entered the year, wanting to follow up and fill all these areas with drill hole information and look for extensions, build this story outward. Very first hole to the east or to the right. We announced this February 5th. This is the best hole to date at the time, 14.5 meters at 12.2%. EU308, these are equivalent grade numbers. Assays are imminent. That will come to market as soon as we can get it out the door. But regardless, incredible mineralization. 5 meters of 35% grade material, in and around that unconformity. And then the market sell-off started, chaos started. So we put our heads down, refinanced, said, look, let's work through the winter, move the story forward, we'll announce it in the spring. And here's the announcement in the spring, some of the highlights. Even better holes drilled. Importantly, in that gap area, it's actually not a gap, it's actually full of ultra high grade uranium. We've got grades here, 8.5 meters of 25%, including 5.5 meters of 37% uranium. Incredibly rich mineralization in and around that unconformity. Next story, you got 8.7 meters at 13%. Incredibly rich grades. And then we took another step out 50 meters late in the winter. Hole 95 on the right side, or left side, sorry. 3.5 meters at 2%. Not good enough. But these are the types of grades and thicknesses we see within 10 to 15 meters of a hole like 7901. Right next door to that ultra high grade mineralization. So this is how fast the mineralization comes, goes, and picks up again. So when we see this and we see it with the alteration, we get excited. It's like, wow, we're close to something special here. So hole 95 was a real indicator late in the winter that, wow, we need to be looking west in particular here, because it sure is shaping up like another pearl forming itself on the western margins. And here's that best hole, that 7901, just for looks. It's black. Why? Because that's essentially pure uranium in the box. And this is really only observed in the heart of Cigar Lake and in the best parts of McArthur River, perhaps in the very center of NextGen's Arrow deposit, perhaps. This is complete replacement of the rock with uranium mineralization in and around that unconformity. This is exactly the type of mineralization we want to be discovering as we continue to build the Pike Zone story outward. So we talk a lot about McArthur River. So, we know that we need to be looking outward for pearls on a string. So McArthur River, for context, is 7 unique zones of mineralization. If you put it all back together, there's only 600 meters in strike length. Only 600 meters in strike length is 750 million pounds of uranium in McArthur River. So put them into pearls, 7 pearls, one of which is host to half that reserve at McArthur. It's an incredible story. You need to be finding these incredible grades and thicknesses, multiple zones of mineralization of pearls along this fault structure represented here by the blue ribbon, which is the graphitic basement rocks, which are faulted up at the unconformity with the sandstone. So we want to be following this blue target horizon. Again, not a single drill hole for 1,000 meters to the left, not a single drill hole for about 600 to perhaps even 800 meters to the right. Completely wide open for expansion. And this is what we've turned our attention to at Pike Zone is, yep, we've got ultra high grade uranium. Yep, it's showing continuity. Yes, we're starting to see that concept of pearls on a string. Now we're going to step out. We're going to see how big this thing could be, this mineralizing event. And if we're right, we should start to see additional mineralization, ultra high grades perhaps, outward from this 250 meters of connected mineralization we've already drilled at our Pike Zone to date. Just for context, before I leave this slide, we currently have 3 drills turning on this project. all in this sort of general area here with these two red circles to start. So we've been active now for about 3 weeks. So, the drills are turning, the program's going very well, and we'll look to be drilling probably into September of this year. So just to put this in some context, this is a photo from a couple of weeks ago over our Pike Zone. You can see the 3 drills there. In fact, the center drill that you see on your screen hasn't moved in 18 months. 18 months, and that's because we use downhole deviation technology to actually trim cost and save effort. So those are the 3 drills. The red outline is roughly where Pike Zone sits at depth, and it's open again in both directions. So this just gives you an idea of the terrain that we're working in. High and dry, perfect location to continue to expand this target as we move through the summer. Last year, as an example, we saved $3 million using this deviation technology for our shareholders. It's about 30% savings. That, importantly, went back into the ground in terms of drill hole testing expansion of the Pike Zone. So very efficient drilling. We're among the lowest cost per meter explorers in the Athabasca Basin region. And it's all done in-house by the CanAlaska geoscientists. They plan, they execute, they work with the drill team to actually hit these targets. We can hit a 2-meter target at 800 meters depth with no problem with this technology. Just incredible result, incredible team, and this is great exploration country for everything we want to do here in the summer. We've talked about this before. Strategic opportunity here to be up against the infrastructure in the southeast Athabasca Basin in particular. This is from Cameco's website. Reality is the McArthur River has a mine life depending on how many pounds per year they're produced, but let's assume 20 to 25. You're looking at somewhere around 15 years to exhaustion of the current known reserve base. Now that sounds like a long time, but if Pike Zone is a tier 1 asset, let's just assume that, then it's at least 15 to 20 years to first production. The time is now to go out and make a discovery that is tier 1. There is no other tier 1 discovery in the southeast part of the Athabasca Basin that we're aware of that could feed the current Key Lake milling infrastructure 15 to 20 years from now. So you have a scenario where Cigar Lake is offline in terms of production in about 11 years. You've got McArthur River in about 15 years, 20% of current global uranium production. 2 of the 3 tier 1 assets currently in production on a global scale are out of order within 15 years. What's that going to do to your uranium market? It definitely is going to be higher than $75 a pound, we believe. And it simply has to move to bring on new production or incentivize new discoveries like our Pike Zone. So it's an incredible scenario shaping up. The market will be under stress, and eventually that is going to catch up to everything. The price is going to climb, and it sure looks great fundamentals forward. We do, of course, bring outside parties in to explore with us. Crease is an example with Nexus Uranium, $19 million option deal. They're currently in stage 1 of their option agreement. Geeky Marshall North Malema with Basin Energy out of the ASX. It's a $15 million Australian deal. We're waiting for some word out of that as to their plans. Constellation, as I stated, has just started drilling. Be news on that shortly. And Waterbury East came through a drilling program, fairly successful drilling program a while back. And that's moving forward. So this is part of our business. Cash shares, work in the ground, providing opportunity for our shareholders to realize other discovery through others' efforts within our portfolio. So we truly believe we're on the start of a rapid valuation trajectory, just like NextGen, perhaps Cameco, if you go way back in time. The point is, on these discoveries in the Athabasca Basin, when you start to get into significant grade and thickness like we are, that true tier 1 look, for instance, like NextGen's Arrow, the revaluation of your company occurs very quickly. That occurs very quickly, within months to a year, perhaps a year and a half on the outside, when you start to show tier 1 potential. And that's exactly what we're showing at our Pike Zone. So we believe that we're on the start of that rapid valuation trajectory for our shareholders with continued success at Pike Zone, building that story outward that we are truly into a very significant discovery. So we look forward to delivering that for our shareholders in the near term. So we are truly advancing a new ultra-high grade uranium discovery. Within my hand here is 70% grade material. You only find this at deposits like Cigar, McArthur. It's steel in a box. Incredible stuff to hold, heavier than lead, incredible density. Just an amazing discovery at Pike Zone, and we're very proud to be bringing that to our shareholders today in terms of what we're doing through the summer as we move into the fall and hopefully into 2026. So we welcome you to join us for this discovery journey. We believe we're on an incredible path, and the drills are turning. 3 of them going right now, so stay tuned for some incredible results moving through the summer and into the fall. Thank you.
Great. Thank you very much, Corey. Very informative presentation there. We are going to now kick off the Q&A portion of the webinar. Reminder to everybody online, you can type your questions into the chat box at any time. We already have several questions here, Corey, and you did mention you've got 3 rigs here focused on West McArthur. How much of your attention is based on closing the gap versus trying to expand the zone? Show us that it's likely much larger than 250 meters in strike.
Yeah, we've really changed our focus now from, really, not so much about driving towards that first resource. I think what our big shareholders are telling us is, yeah, we see what you're doing. We see the ultra high grades, looks impressive, but now how big could it be? Is it just 250 meters or is it bigger? And I think we've really taken that to heart through the spring. We changed our focus now to the summer to really moving out, trying to step out. Now, recognizing that, half of McArthur River sits in the space of a North American football field. So as you step out, you need to be extremely mindful of these types of grades that, you could be walking around something that might be less than 100 meters in length, but contain a very significant amount of metals. So, the geologists know what they're looking at. They're very adept to this model. So, we're stepping out, I think 50 meters and 50 meters is probably the right way to go. Just to make sure we don't miss anything. Doesn't mean we're not going to step out further, just to take a little bit of a look. But we're really focused on trying to build that story outward from what we know today. Again, showing how big this system could be. So that's our focus through the summer right now is how big can this get?
Yeah, you said 50-meter step outs. Do you find that very aggressive in the Athabasca? Is that a big step out, or should you be going from known to unknown systematically, maybe shorter step outs?
Yeah, I think when you look at the periodicity of a McArthur River or some of the other big deposits in the Athabasca Basin, you have to be very careful. Like I articulated, McArthur River, several of the zones are less than 100 meters in strike length. And that contains a lot of metal. So, you could easily, if you're going on 100-meter sections, walk around one of these things and not even know it's there until you come back later, or if you even ever come back. I often tell the story about McArthur River in the early 90s when they doubled the resource. And I was working for Uranners at the time. It's like, well, how is that even possible? Because they just gone underground. Well, the fact of the matter is, Zone 2, which is host to 350 million pounds, they drilled 10 meters to the south and 10 meters to the north, and didn't drill in between. Zone 2, 350 million pounds, sat between 2 surface drill hole fences. They didn't have a single hole between, and there it lay. So I think, understanding the model very acutely tells you should probably not be stepping out 100 or hundreds of meters, because you really could miss what you want to see. And, I often use the analogy a tiger by the tail. And that's exactly it. We had the tiger's tail here not too long ago, and now we're working on the body. You want to just continue to sort of let the geologists follow their nose and think about what they see as they move into the target and where it's guiding them in terms of where these ultra high grades occur, because they are structurally bound and structurally formed, really. And, when you see certain things, you need to be going, oh, we should drill over here. And that's exactly how they're approaching their business. So, yeah, it's a bit of a science.
Yeah. Do you think this is a tier 1 asset yet? If not, what is required to get there? And I'm thinking of the deposit that you have right now.
Well, obviously I can't talk about, any kind of mineral estimate or anything like that we have to date, David, but, I can appreciate the question. What I will say is that, in order to be considering out in this type of terrain near McArthur River, to be considering yourself in that tier 1 category, we believe you need to be 100 million pounds plus, and probably over 5% average grade. Of course, there's all sorts of geological parameters in there that can alter that. But the reality is you need a very sizable type deposit to actually start considering it to be, that tier 1 category. And that's sort of the threshold that we use as a basic sort of base point. So everything we do is geared towards trying to drive us to that 100 million pounds, maybe 5% average grade range on both those, of course, and go from there. And right now, when you start drilling, 10, 20 meters of 7 to 40% grades in some holes, you are in the right category of grade and thickness. Now you just have to put it all together and build it out. And that's exactly what we're focused on, building it out, looking for the next pearl. We might not even be in the best part of this system yet. And that's just scary to actually think about, scary in a good way. Scary to think about that we may not actually be in the best part of this system. And that's something we're paying attention to and trying to go out and see and test. So, that's part of the story that's unfolding in front of us.
Yeah. So you've said the word pearl or pearls several times now. I think last year you talked a lot about having these two high grade zones that were separated by 90, 100 meters. But I think as drilling's gone on, you've sort of filled the gap, now. So do you think this is one zone that you've got?
Well, I think out of that 250 meters that I'm showing you on the screen, if you can see that, out of that 250 meters of continuous uranium mineralization at the unconformity around it, about 130 or 140 meters of that is consistently with ultra high grade uranium. So that is probably one pearl until we drill it, of course, on each end. We don't know that, but it's definitely an incredible high grade, very high grade, ultra high grade section along this fault structure. So, the gap area, I'll admit, when we entered the winter, is like, well, let's put a few holes in there and see what happens. Well, in fact, that gap area was not a gap. In fact, it's all ultra high grade uranium between what we thought were two ultra high grade pearls, if you want to call it that. So it's kind of turned into one big pearl at this point. And until we find the limits and then move on to another pearl, for now it's one. But it's certainly showing signs of being more than that as we step, particularly to the west. As we continue to step westward, we're seeing great signs of everything we saw in this section that we first drilled over the last, say, 12 to 18 months. So it's very encouraging that we're, next door to something very similar, just downtrend.
Okay, you sort of touched on my next two questions here. First of all, I guess, does every hole or section demonstrate this ultra high grade uranium core located within a broader zone of lower grade mineralization? Let's start with that one first.
Well, every section is different geologically, but what I will say is the ultra high grade uranium really is focused at the unconformity and even up to, say, 50 meters into the basement. Depending on the section, that moves around a little bit, so it's not a simple block of mineralization. It's very complex because it is structurally controlled. However, what I will say is that every section shows the basic similarities: ultra high grade uranium in and around the unconformity, and then at certain points you get really deep penetration in the basement with some very good grade, including ultra high grades in some of these holes. So, and that's McArthur River. That is not unique to Pike Zone. That is a McArthur River type analog where you get very high grades in and around the unconformity and shoots down into the basement in certain places. Zone 2 would be really special in that sense. But, it's looking very, very much like an analog. And I'm not saying we have 750 million pounds there. Please don't take that. However, it's showing all of the indications that this is a tier 1 type mineralizing event. Grades, thicknesses akin to the nearby McArthur River type deposit. At this point, we have every reason to believe that this mineralization will continue downtrend until, of course, we've drilled it and proved it. But it certainly is showing no signs of stopping. No signs of stopping based on the drilling that we've completed to date.
Okay, so I'm going to answer the next question, is that the deposit you think this looks a lot like is McArthur River. Are there any comparisons that you can make specifically to that deposit? Not just because it's 40 kilometers away, but its style of alteration, mineralization, structure.
No, absolutely. So the structure, very much the same. We've got an offset at the unconformity. McArthur River has an offset at the unconformity. The main zones at McArthur River, the high grade or ultra high grade portions of McArthur River are controlled by structural upgrades, cross structures interacting with the main structure. And that's where you find these pearls that we always talk about, these pearls. So structurally, it looks correct. Chemically, this is essentially uranium mineralization and nothing else. I mean, there is no nickel arsenides here. There's no cobalt. Very, very, very few of those tracers you might find at a Cigar Lake analog, for instance, or even the nearby Fox Lake deposit, which is just, 10 kilometers away from this along the same fault structure. Fox Lake looks every bit much more like a Cigar Lake analog. It's what we call polymetallic. It's got nickel, arsenic, cobalt, other things with it. This is just uranium. There's very little else here, which again strikes to the comparison of McArthur River, which is just uranium. Because McArthur and Cigar are two different end members. McArthur's monomineralic, Pike Zone's monomineralic. Cigar Lake is polymetallic. So the halos, the alteration halos up into the sandstone, we're seeing a lot of boron enrichment here in the sandstone, both in the hanging wall and the damage zone, and above the mineralization, specifically Pike Zone and to the west. So again, McArthur River has a large boron halo or dravite halo. Everyone talks about dravite. It's a boron halo. Identical, again, And we'd anticipate that coming to surface even at Pike Zone. We haven't drilled it because we don't need to, but it's a very large alteration halo. So everything is lining up to look very similar. And now we're looking at scales. These pearls of, say, 130 meters, for instance, at Pike Zone, again, very similar to the pearls that are on McArthur River. There might be one zone, I forget which is, maybe zone 4, which is a little bit longer. Perhaps it's 200 meters in length. But overall, they're generally, 100 meters or less. So it's fitting the model. Mm-hmm. And we're fitting the grade. We're fitting the thickness. Now we just have to drill it out and keep looking for the next pearl and build this, really see how big this system can be.
Yeah. Now, are you only focused on the mineralization that straddles the unconformity and the upper basement? Would you consider looking deeper into the basement rocks again, like maybe even down around where you made the discovery hole to begin with?
Yeah, we're very much focused now, based on the results that we've had at Pike Zone and knowing where the ultra high grades occur. We're very focused at the unconformity up to about 50 meters into the basement. Of course, the geoscientists decide how they want to finish a section or finish that work. But generally, we're in the upper 50 meters of the basement rocks, right at the unconformity. Again, the unconformity is where most of the best grade occurs, which is pretty classic. We do have mineralization here down to about 200 meters below the unconformity that we've hit in some of our earlier holes, as I think you'll appreciate from earlier news releases a couple years ago. But it's very hard to delineate mineralization in the basement at these depths, and that's best done from underground. So is there potential below 50 meters below the unconformity? Yes, there absolutely is, and we're definitely watching for it. However, it's not something we're trying to put together today. We're very much focused at this point along that blue ribbon at the unconformity, say the upper 50 meters of basement. And that's by design because of everything we're seeing currently at Pike Zone and where we find the most richest mineralization.
Are you finding any mineralization perched up shallower in the sandstone?
Not really. There's a little bit in a couple holes, but no, it's occurring fairly tight to the unconformity. You might get it, 10 meters above or so, depending on where you pick that point. It's right it hugs the unconformity very well. When you start to get mineralization up in the sandstone, some deposits have it, some don't. Cigar Lake, for instance, does have a number of, and they're not economic by any stretch, but it is, little veinlets or mineralized shoots up into the sandstone. It's what we call perched mineralization. We're not seeing a lot of perched mineralization here at all. It's very much hugging that unconformity and down into the basement rocks.
Okay. And then maybe a drilling targeting question here. Most drilling always targets deposits sort of at a right angle to the structure or the deposit itself. Why can't you just drill horizontally along the fault line at the target depth?
Oh, horizontally from surface, I'm not sure you could bend the drill steel that much. We use that deviation technology, and I don't have a slide in here to show it, but we can really bend these holes quite drastically. In fact, you can see it on the screen right now. If you look at some of them to the right, you can see how they really bend around. When you bend it too far, you snap the rods. There's other technology out there for horizontal drilling you could try and deploy, but over the years, I think companies have considered it, and including Cameco. And one of the problems is, once you're traveling along that fault structure, this is really clay, sand. It's gritty stuff. It's you're at risk of really not being able to drill it. To be honest, it's such a damage zone. So I think that really isn't in the cards in this. So you really have to work sort of across the structure, across the mineralization, sort of methodically. Now, what I will say is that with the deviation technology that we deploy, we turn 800-meter holes into 300-meter holes. And therein lies the cost saving. We can turn a hole around here on an offcut in about 7 to 10 days on the high side. Very efficient. And with 3 drills turning, you can imagine how many holes we're completing. So, it's a pretty good pace. And the team's doing a great job. Incredible stuff.
Yeah. Besides the logistics of drilling that kind of hole, I think it's just as important to know where you go in and where you come out of the zone as well.
You do need boundaries. You absolutely do. And
150 meters of mineralization would be exciting on paper, but only on paper, I think.
Yeah, you're absolutely right. You want to try and get a feel early on the true widths of these things, so you can actually make those types of judgments. If you're just traveling on mineralized vein, you really have no context as to what you really have. Yeah, it sounds great, it's sexy, but reality is you can't really tell much from it. So, we're very much following the traditional approach of section work, non-traditional in the sense of we're turning 800-meter holes into 300, which I think is a unique quality that CanAlaska brings to its shareholders.
Yeah. Now, you mentioned before our call that the lab turnaround's improving. It's down to 2.5 months. Do you find this turnaround acceptable at keeping investor interest hot?
Well, 2.5 months is better than 6 to 8 months, which is what we were seeing. So yes, I would say now it's a lot better. I mean, reality is it'll probably get shorter with time as the lab starts to catch up. But, what I will say is that the current turnaround for us is about 2.5, maybe 3 months on the high side. That's why I have assays imminent here. We are about 2.5 months from the finish of our winter program. I would suggest that assays are imminent to our shareholders and to the investment community. So stay tuned for that. I think historically, based on 2024 work, we've now proven to the market that our assays generally come back around 10% positive on average to our EU 308. Again, we're the only junior company willing to put out EU 308 that I'm aware of. It's because of our Cameco and Orano background. So our shareholders actually get an early look at our results, in this case, August 22nd on the screen here, get an early look that we later confirm with assay and confirm to the upside. So all these numbers you see on the screen, I might suggest you can expect the numbers to come back better in assay. And that's based on the work that we did in 2024 on some of these very high grades.
Mm-hmm. And what's the timeline for delineating a maiden resource here? Would this be something you consider once you have all the results in from the summer drilling?
Well, we're gonna gauge that as we go, David. I mean, it's gonna partly depend on what we see through the summer. Again, to be clear, in the spring, we heard from major shareholders, focus on moving outward. Don't worry about the mineral resource right now. We see what you're doing. We see what it looks like. Yep, you've convinced us. Now, how big can this be? And part of that is stepping out. I mean, I think the savvy shareholders out there that understand, the McArthur type system that we've been talking about for so long, for many years, really, they understand that you should be seeing multiple pearls along this blue ribbon or this fault zone. So that's what they kind of want to see. They want to see multiple pearls. So, if we bump into, for example, 100, 200 meters away from this, bump into or discover another ultra high grade hole, say something more akin to 7901 than not, I mean, holy cow. I mean, you have just completely opened this up to something that, I would dare say is probably guaranteed to be tier 1 type potential now. So, that's what we're focused on. Listening to our shareholders going, what do they want to see? They want to see us stepping out. We're going to focus on stepping out. Makes sense geologically. The geological team now has their eye tuned to it. We're financed to do it. Look for that next pearl. Prove how big this system really could be.
Right. Good. Question about your corporate strategy here as a project generator. Do you ever foresee a time or projects where CanAlaska might control the entire thing from beginning exploration through to production? Is production your goal, or will you always really just aim for the JVs and partner with companies?
Well, I've been in this, as you know, for 31 years. I've been part of the big companies, and I was chief mine geologist for 5 years at Eagle Point. So I have a unique understanding of these deposits and the milling and the mining and the CNSC, the permitting, all that stuff, because I was involved in it for many years. It's not for small companies. And, I think our shareholders are very clear, as is our board and management, that we want to build the value for our shareholders early on discovery, move it as fast as we can, up that valuation trajectory, ideally create an auction where multiple parties want access to it, and build as much value as we can for our shareholders before we exit and let it move on down the different path, which is, moving toward production. So that's not our game. That's really not something we consider. It's very much about the front end discovery, 1 to 3, maybe 4 years on the outside, build that value quickly and get out. And then, maybe as a team go do it again. And that's kind of the fun part.
Okay, so you said build value. I guess I've got a loaded valuation question here. You pointed to earlier how close you are to infrastructure. How advantageous would it be for a nearby uranium producer, and no names provided here, to acquire CanAlaska or just the discovery, given that they've already got a uranium mill close by, which is possibly substantially underutilized? What kind of premium might that carry? in that case?
Well, I think that's indeterminate yet, but what I will say is that if you go back 20 years to the discoveries in the Athabasca Basin, none of them have been this close to infrastructure. Certainly not significant asset discoveries. I'm not aware of one that's 15 kilometers from a mine, an active mine. I'm not aware of one that is 15 kilometers from the haul road directly to a mill that has a very specific need in 15 years. And we just happen to have a partner in Cameco that owns all that infrastructure. Of course, there's other players that can step in there as well. But the point is, I don't know what the premium can be given its proximity to this infrastructure because we simply haven't seen it. Now, if we look at all those assets that have gone through discovery through to M&A over the last 20 years, and it's easy to verify, you're looking at somewhere around $8 US a pound in the ground. That's, you only have to look at the most recent Fission Paladin deal. It values it at about $8 US a pound in the ground, which means that that's sort of the floor plus a premium is the way I would view it, based on history. We still have to prove what we have here, and we prove that it's of interest in pushing that tier 1 envelope, or certainly in the tier 1 envelope. That's fine. We'll get there. But once you get there, you should be garnering that as a basis point, and that's based on history, both in good and bad markets. It really doesn't matter. That's the valuation that is happening out there in the M&A space. So if you just use that very simple metric, and I've talked about this before, and it's very simple: 100 million pounds. Okay, if you put that as a resource in the ground at $8 US a pound in the ground, you're looking at $1 billion valuation. We're currently 150 million market cap. So, we need to move down this path. We need to build the value, and that valuation suggests we should be in that range, and that's over 2 decades of history in the Athabasca Basin, and it doesn't include anything this close to the infrastructure. Certainly infrastructure that has a dire need, in my view, 15 years from today. So there's upside there that we don't even know, and we'll see.
Great. Thanks for that, Corey. So now this webinar seems to be all about West McArthur. What is your next most exciting exploration project? Are you happy with the current amount of attention, budget that project is getting? Do you think the market is giving any value for that project?
Well, excuse me. So our Crease project, I pull it out of the pack here a little bit because I think through the winter, as it's been resurrected from, its dormancy post-Fukushima, I think it showed, early signs of great alteration and everything we'd want to see in terms of moving it down the path toward a discovery. It's still pre-discovery, but I think Crease is one project that now is being funded by Nexus, which, is certainly of interest, and they're moving it forward as part of that $19 million option agreement. Another project that's moving down the path, it's been a little slow the last few years because we've redirected our attention to West McArthur, is our Waterbury South project. We hit mineralization there. It's just 4 kilometers from Cigar Lake, by the way. We hit mineralization there with up to 2.5% grade nickel arsenides. That is a Cigar Lake analog at 2.5% nickel arsenides. I mean, it looks correct. It's got the chemistry. It's got lead with it. I mean, it looks correct, but we need new geophysics. We need to move that forward. It's simply not something we're focusing on. But Waterbury South would be another great asset. And then, of course, the stuff south of Key Lake. I should actually pull up a map here. South of Key Lake, we've spent the last, say, 3 years assembling an incredible portfolio just south of Key Lake in the right geology. We've been very specific about staking, about doing a deal, for instance, with F3. We did a land swap there to build a portfolio. But we've assembled this when no one was really paying attention to the South Key Lake area, and we're very, very excited about the basement-hosted opportunity for discovery that sits immediately south of Key Lake. We're looking for an Eagle Pointer Arrow analog. Okay, no one's really looked for it down here. There's very few drill holes outside of, a small segment of that main corridor or geology. So it is wide open, and we're very excited about getting into the key projects. So to your point about valuation within our portfolio, well, I think CanAlaska has built now the story on West McArthur on the Pike Zone. Everything else is sort of in the back seat. We will undoubtedly start to move some of this forward as we can tap cheaper capital, no doubt. But let's be clear, we're focused on moving Pike Zone to the next level, which brings everything else along with it. And obviously some partnerships out there might have success, and that's good for our shareholders because not only do we own a chunk of these companies with our with their share issuances to us as part of the deal and the cash, but also we usually have a residual interest in a royalty. So, discovery is good, whether it's in our projects with our money or in our projects with others' money. We preserve that value for our shareholders moving forward. So the key is lots of drilling, lots of opportunity. But for us, West McArthur is the key right now as we move through 2025.
Right. Quicker permitting, shorter mine development timelines are certainly needed in the uranium mining industry. What are the largest hurdles that you have to turn your discovery into a mine?
Well, I mean, again, we don't want to move it into the mining phase or development phase, but I think I've seen nothing. I'll speak for myself. I've seen nothing that suggests faster than 15 years in terms of once you have a resource of consequence, you move it through to first production. Can red tape be cut? Sure. How much? I don't know. If the government wants to do it or the groups involved, the regulators want to do it, they can do it. They haven't, in my view, shown signs of that yet. You've got examples in NextGen and Denison. I would suggest they're looking at that 15-year timeline quite realistically, and that's just the way it is today. So, I would love to see it shorter, because then I think a jurisdiction like Saskatchewan, as good as it is now, where 80% of the population supports uranium mining, which is, given my global experience, this is a very unique jurisdiction in which the support by the local population is, I would say, extreme to the positive, and safe and secure. Saskatchewan in general, but then Canada, I mean, it takes time, but it's very secure. And I think that's one of the great things about it. So can it move forward quicker? I'd love to see it. Will it? I haven't really seen it yet, so we'll see.
Great. So we're almost at the top of the hour here. Maybe one last question here. What are the next significant catalysts that may drive ongoing investor interest in the stock? And obviously, you said assays are pending.
So assays are imminent. So, that is something that will, prove our winter work. Again, 2.5 months to assays coming in. So, the labs are doing well. And that shouldn't be a surprise for any of the companies now. That's the timelines we've experienced. So that's good. Next up, the other drilling in our portfolio, drilling at West McArthur as well. So, West McArthur will be drilling through until about early to mid-September at the very least. We're going to have a couple of other drilling programs potentially going on. Well, one is going on right now, Constellation. So that's probably 6 to 8 weeks there. So a lot of news flow coming on drilling through into September. And then, of course, we'll have assays in Q4 and plans with our joint venture partner Cameco for West McArthur coming to fruition somewhere in Q4 as well. So there's a lot of news flow coming from this portfolio. We've got about $5 to $5.5 million of spend in drilling alone at West McArthur over the next several months. So that's a lot of work. I can expect probably another 20 or so intercepts of the unconformity through the summer at what is the Pike Zone. It's incredible amount of news flow coming from CanAlaska for shareholders through this period as we move into the fall.
Really looking forward to that. Perfect. Okay, Corey Bellick from CanAlaska, thank you for speaking with us today.
Well, thank you, David, and I appreciate Red Cloud for hosting this webinar as well. So thank you very much. It's a real pleasure to talk about the story, and please follow us. Incredible summer ahead.
Okay, thank you everybody else for tuning in. Reminder, the Red Cloud Securities will be back tomorrow afternoon when Ron Stewart sits down with Spanish Mountain Gold. So that is July 16th at 2 p.m. Eastern. So have a great day, everyone, and thank you for supporting Red Cloud's webinar series.